Financial markets are platforms where buyers and sellers trade financial instruments, such as stocks, bonds, and short-term debt. These markets are divided into capital markets, dealing with long-term securities like stocks and bonds, and money markets, which handle short-term debt instruments. Financial markets play a crucial role in resource allocation, providing liquidity and facilitating price discovery. Financial instruments include equities, bonds, derivatives, and money market instruments. Equities represent ownership in a corporation, offering dividends and potential capital gains. Bonds are debt securities providing periodic interest and principal repayment at maturity. Derivatives are contracts whose value depends on underlying assets, used for hedging and speculation. Money market instruments, such as treasury bills and commercial paper, are short-term debt securities providing liquidity and safety. Capital markets include the stock market and bond market. The stock market is where shares of publicly traded companies are bought and sold, while the bond market is for issuing and trading debt securities. The primary market deals with the issuance of new securities, whereas the secondary market is where existing securities are traded among investors, providing liquidity and marketability. Money markets consist of short-term debt instruments such as treasury bills, commercial paper, certificates of deposit, CDs, and repurchase agreements, repos. Treasury bills are government securities with maturities of 1 year or less. Commercial paper is unsecured short-term debt issued by corporations. CDs are time deposits with fixed interest rates and maturity dates offered by banks. Repos are short-term loans secured by collateral, usually government securities, providing liquidity to financial institutions. Financial markets encompass capital and money markets, each serving distinct purposes. Key financial instruments include equities, bonds, derivatives, and money market instruments. Capital markets involve the stock and bond markets, with primary markets issuing new securities and secondary markets trading existing ones. Money markets deal with short-term debt instruments like treasury bills, commercial paper, certificates of deposit, and repurchase agreements, providing liquidity and safety for investors.